say thank you to everyone for coming to Flip the Switch, Igniting Saskatchewan's Landscape. My name is Catherine Renier, and I am the CEO and founder of Coconut Calendar and your host for this evening. What I really want to do is events like this just don't happen by themselves. And as things are progressing in the tech industry, it's become a really relevant and hot topic, and how we can go ahead and get the tech landscape here ignited. So when we came up with this idea to have event, it's our first Coconut Calendar hosted event, Brie Lynn, our marketing manager, and I need you guys to give her a big round of applause. She's like the silent hero of the company for making this all happen tonight. So, and she's gonna be like, don't look at me, don't look at me. I also need to say thank you to Shaw TV for broadcasting the event. So thank you for coming out and doing that. It's important for us to get the word out outside of this room of what we're doing. I also need to give a very important thank you to our sponsors, ICT West, who sponsored the drinks this evening. Yeah. That was awesome, so thank you. They're gonna come up here and do a talk, and also thank you to the Saskatchewan Capital Network, who provided the audio and visuals, so you can hear us all very clearly, so a round of applause to them. And we're actually just going to move right into Marie, who is representing ICT West, who sponsored the event. And then after that, Doug, the president of the Saskatchewan Capital Network, will come up. So Marie, are you here? Oh, you can have a seat here. You don't have to stand in the back. Like, Wes is blocking your view, number one. Wes, you should come have a seat.
Thank you. I'll be very brief. On behalf of ICT West, I wanted to say thank you to Catherine and her staff at Coconut Calendar for inviting us to participate in today's event. We're just thrilled to be sponsors, and thank you. So, ICT West is a tactical and practical project designed to support and promote Western Canadian technology companies at international shows. So we take these Western Canadian companies and we showcase their technologies to potential customers, investors, and partners. The three shows that we participate in are Web Summit, CES, and Mobile World Congress. Coconut Calendar was an ICT West delegate at the show in Dublin in 2015, and we're just thrilled that Catherine has had, that she was so well prepared to take advantage of a fantastic opportunity that presented itself while she was there. And so we're just pleased as punch for her. And I just want to say thank you again for having us. Thank you.
Thank you, Marie. And Doug, drum roll. Clinking? No? Okay. No problem. Thanks, Doug.
Well, on behalf of SCN, I would also like to welcome everyone. It's great to see this many people in the room. If anyone doesn't know what SCN is, it's an angel investor network. If that interests you, either because you would like to be a member investor or if you would like to come and pitch to the investors in the network, I'm around. There's many SCN members here as well, so please come chat. In that vein, I don't think I would be either surprising or offending anyone if I said that our startup environment in the province is sort of immature, has gaps. So given that, having some, very sort of well-experienced investors from mature investment environments, well-established investment environments, I think is a remarkable opportunity. So I'm just over the moon that Catherine has put this together, and and thank her for that. And I'm looking forward to a really interesting talk. So I'm getting out of the way.
All right. I didn't want this to be boring, so we're going to do a night of charades. No? Okay. And I'm also not a comedian. Okay. So I know we're all excited to hear from our lovely guest tonight, and I just wanted to say it was really important that all of you were actually, this was an invitational only event, and we did that on purpose, mostly because we're seeing the success in all the people that are supporting the tech community in one way or another. So we all have a common thread amongst us that we want to do something better and bigger in Saskatchewan. And this is an opportunity tonight for us all to work together to do that. It's really important that we walk away with something constructive. So these questions are going to be really, really difficult. And no, they're not. Well, you know, it is hard. Taking what we're doing and launching it to the next level is difficult, and that is why we're having these events. So the questions seem easy, but actually executing it is another thing. So I hope we all just don't have drinks and a good time, but we actually walk away with something we can actually take to our business and do something a bit better with. Sorry, Jordan, am I blocking you out of the way? No. I'm the better looking one probably anyways, that's okay. Sorry, love you, Jordan. Okay, so I'm gonna go ahead and introduce our lovely guest this evening. So ladies first, we have Lori Demetrician. Ms. Lori serves as a Chief Equity Investment and Portfolio Manager at PIC Investment Groups. As a portfolio manager at PIC, her role is to leverage the firm's internal resources to help equity investment companies grow and succeed. And I've been able to work firsthand with Lori. They've invested in Coconut. She is dedicated, she's hands-on, and she's a huge asset to our province. And so I hope tonight you take the opportunity to speak with her. So thank you, Lori, for being up here. You should clap. Next, we have Mr. Neil Dempsey with Bay Partners, which is located in the Silicon Valley. His performance through his multiple funds has created returns in the billions. Neil is a huge influence and active alumni to the University of Washington. He is also the founder of Neil's Running Start. And just to give you a quick background on that, when Marie talked about that Coconut went to Dublin to Web Summit, that's how actually the opportunity came for myself and Neil, is he had a mentorship program, and I'll let him talk a little bit more about that. But that program is really what we were trying to do here, is he saw this, see, I tell him he can talk about it, and then I just do it. He saw the need for individuals, whether they're in Europe or in Canada, not having that support infrastructure like they do in the Valley. So he invited 4 individuals, fantastic individuals. You can go to neilsrunningstart.com. And we stayed there for a month. And I said I was walking around with a little like pen light in the dark. And then with Neil and Chris, it was like the floodlights turned on and I was kind of blinded for a bit. So, but I have to thank Neil for coming down here and opening up our eyes to, you know, what can be possible. So Neil's also an angel investor in Coconut, and we want to thank him for his time. Next, we have the very handsome Chris Noble, who is good friends and has worked closely with Neil at Bay Partners. He grew up in Boston. We're happy the Patriots came out on top there. He currently, no questions about the game. Okay, fair enough. Chris has been an executive at very successful firms, and he's been on the other side of the table as an investor, so he has a really unique view tonight. And so one of the things I heard about Chris in the Valley is that he has a very good nose for selecting excellent startups. And that's, people who are investors in this room are kind of curious, how do you pick the right startup to work with? So please listen to what he has to say. And Chris was also one of the lead mentors at Neil's Running Start, and probably had the most influence in opening up my eyes to what the possibilities were. So thank you for that, Chris, and he's also an angel investor in Coconut. So Jordan is definitely a success story here in Saskatchewan. Jordan is the CEO and co-founder of 7 Shifts. And 7 Shifts makes a scheduling app that's used more than over 1,600 restaurants. How many restaurants do we have in Saskatoon? Like a ton? We're over 3,000. Oh, you are? You guys got to update that. Okay, 3,000. So double growth in 24 hours. That's how he rolls, and I wouldn't even question him. I'd be like, yeah, you probably did that. He's attracted over 1.2 million in venture capital, and you know, I've heard Jordan say that people have really tried to say, you know, go to Silicon Valley to move your company, but it sounds like, Jordan, you're really happy to try to make things work here in Saskatchewan. So very good success story. And last but not least, we have Mike Brennan, the CFO of Vendasta. I'm pretty sure everyone in the room is very familiar with Vendasta. Now, Mike, I'm not sure I have the tagline right, but it sounds like that it's been changed to digital solutions to businesses in reputation management. You'll expand? Okay, great. And so in Saskatoon, I would consider them the big boys and girls on campus. You guys have had tremendous success. I think it's allowed companies like myself, Jordan's, and many other here know that, you know, we can do it from here. So that's been a big inspiration. I believe you've been with the company since 2014? Okay. And it says here that you are the bean counter, ledger lover. This sounds like a nightmare for me. And the penny processor. Yeah? Who wrote that? Okay, that's marketing. Okay. All right, well, let's just get started with the questions. I like things to be conversational, so if you do have a question, please raise your hand. I don't know, I might have to steal one of your mics, or if you just want to come up here and ask a question, we can do it that way. And I'm going to try to keep everybody on track. So let's start from the top. I've kind of divided up the questions in terms of asking the investors versus asking the companies. And then some of the questions are based on calling out individuals that way. So do you want to test your mic just to make sure that we have that all right?
Test.
Oh. Oh, Lori, you're quiet.
They'll work when they need to.
You're going to yell. Okay, great. So we're all here to understand how to elevate the tech landscape. So the first question is, and it'll be interesting with Chris and Neil being from the Valley and Lori, you being right here in Saskatchewan, is what do you feel are the biggest challenges for raising money for Saskatchewan companies? And Neil, do you want to start that?
Well, I think the biggest challenge is people don't think big enough here. And we ran into that with Catherine. I think that everybody here has lots of talent, lots of possibilities, and lots of resources if they look for it hard enough. But don't be afraid to ask, and don't be afraid to think about starting a company and being headquartered here, but use resources around the world. I think that when we first met Catherine, one, she wasn't sure she wanted to raise money, and two, she just wasn't thinking big enough about what her opportunity was. So when we met her and started working with her for the month in California in May of last year, she has a real business. She has big major companies in Canada, and with really in a bootstrap manner. So she had all the tools. She just needed to realize that she had it and go out and get it done. Now she's still not a huge company yet, but she has all the opportunity for that, and she's gotten funding from people here as well as in Silicon Valley. And as we as the business drives to be successful even more than it is today, which we certainly it will happen, she has the opportunity to raise money all around the world because she's selling an enterprise product to customers in all parts of the world. So this can really happen here. You just got to believe in it and go do it and keep asking. What we need here is just more believability in that whole process.
Thank you, Neil. Lori?
I was too busy listening to Neil. So anyway, in terms of sort of my thoughts in terms of raising funds, and I'm talking from an investor perspective, I think we're very young, in terms of the investor side. What we've tried to do to get more people sort of engaged and interested in angel investing is we have taken an active role with the Saskatchewan Capital Network. And I think, those types of organizations are absolutely critical. If we can get sort of more investors, investing as a group, learning from each other, to me, I think we'll be able to have a better chance at having a more sophisticated climate. We're small. We don't have a lot of venture capital here. We all know the names of the venture capital organizations, and it's less than 5. Like there's maybe about 2. PIC is different because we would be termed more in the super angel realm. But I think we have a lot of work to do. I do a lot of work to interprovincially. We have a national angel capital organization, and I think we have to do more too as well, because we'll go to BC, we'll go to Alberta, we'll go to Manitoba. There's lots of action, lots of excitement. We don't think big enough. I totally agree with Neil. And I'm going to do this. I'm sorry, Wes. I'm doing this. Yeah. One of the things we also need is we need parity at a provincial level. So we need an angel investor tax credit. Again, that is beyond, we have to have that. I think it's, thank you.
Whoop.
Thank you. There, that's about it. I will stop now because I could go on forever.
Oh, no, that's great. Chris?
Well, I think that for both investors and entrepreneurs, the thing that you got to understand is whether you start here or Silicon Valley or Seattle or wherever, if you're successful, your company's going to be in a lot of different places. Catherine's small company, she's already Saskatoon, Toronto, and soon to be the United States. So it kind of doesn't matter anymore where you start. And you have to remember that professional, in quotes, venture capitalists are given money by big institutions. And their job is to find a home for that money, a good home. So they're not the enemy. When you go and ask them for money, when you're ready, you're helping them do their job. So for angel investors here and for entrepreneurs here, please remember that. What you're trying to do is create a company that can get to the next level. And that level is very receptive and very deep-pocketed if you have a solid business. So even though it feels uncomfortable, it feels risky, you don't know what you're doing half the time, which is normal, there is a big reward at the end if you do it right. So go ahead and take the chance.
Thanks, Chris. I appreciate that. Okay, so the next question is for Mike and Jordan. And what we really want to understand is, what were some of the biggest challenges you faced in raising capital? And I'm curious as to what percentage was, outside of Saskatchewan. I think we've all gone different routes, the three companies, on how we went ahead and raised money. So it also goes to tell you there isn't one book or one step or one way to do it. So Jordan, why don't we start with you? Because you had a really unique experience.
There's two things in there, right? What was the first
You have to do both. What
I'm
was
ready.
the biggest challenge you faced in raising capital? Let's start with that one. And maybe
Specifically here?
how you went about and how
Okay.
you about. That sounded really cool.
Yeah, so we tried to raise a little bit of money here, and it didn't really pan out. And a lot of that came from just not knowing what you don't know, and not finding success as fast as I wanted to, was specifically in Saskatchewan when I was trying to raise some money. I looked where everyone else was doing it, which was in the Valley, which was in Toronto, which was in other major cities. And so we applied to accelerators. And I went out of my way to kind of stand out, above some of the other applicants to get our face out there and to be known that, we're serious about growing our company and and learning all we can. So we applied to an accelerator and we got into one in San Mateo in California. And so, that
what
was
that accelerator called, Jordan?
It was called Boost. So, I think that we just wanted to go somewhere where we know it was being done successfully. And that's where it was being done successfully. And we learned a lot when we were down there. And raising money is not like a trivial thing. But it was way more straightforward when you're surrounded by people that are doing it constantly around you. And that's what we found to be the most beneficial when we were down there. So it wasn't a major struggle to raise money down there. And we brought that money back here. And it lasted a lot longer
With the
because the dollar's
exchange or
awesome.
without the exchange?
Yeah, the dollar helped big time. So
Good
hello
job.
Infinite Runway.
Oh,
So when we did our angel round down there, it was through kind of like, they were angels, but they were, they also worked with an institutional VC firm, but they themselves as a person, they invested as an angel. And then we came back and we decided to, it was time to raise another round of funding. And we were in Saskatchewan because I love it here and I want to build a big company here. But I think that was the most challenging part, was staying in Saskatchewan and trying to raise money outside Saskatchewan. But we did it through a lot of perseverance. And so we closed our, I guess you could call it a Series seed round, which is with an institutional investment firm in Toronto and in the Valley in May. But yeah, that was a hard thing. It was a lot of grinding. It was a lot of constantly going there, pitching, presenting. But there was a lot of strategic things involved to do that. So it's one thing to pitch and have a story and have your metrics good and have, be likable and all these other things. But there are just so many other forces working against you in this process. So I think you need to be strategic about doing it. And I guess we sought out specific people with specific backgrounds to raise money from, because we knew, I think we all knew that it's just, raising money is great and we can do something with money, but if we just have money, that wasn't good enough. I wanted money and a lot of expertise behind that person, whether it was building big companies in the restaurant space specifically, or other portfolio companies that are in the restaurant space, because I knew those were the best opportunities for us to grow a company in that space, and it's worked. So I think that through a lot of perseverance, it was hard to do, but I think you have to be really strategic about who you go after too in that process, because you can't just you're gonna beat yourself to death if you just go to every single person that has money. You need to be, I think, a little bit smart about it.
Would you guys agree from an investor standpoint that you appreciate when someone takes the time to not just ask you for money, but know who you are and say, I'm approaching you because I think you can make a difference? Huge, right?
Yeah, it's very helpful. I mean, if the company's done their homework, and the fact that we do SaaS investments, software as a service, and they come in and know that and talk about other portfolio companies or know what happened or know some of the management, it is helpful and it does open the door. They've done their homework and they understand what we're all about.
No, yeah, this is a conversation.
Can you tell us, maybe one or two of the successful factors that contributed for you to close your seed round? Was it traction? In fact, you've got sales and that type of thing, or one or two or three of the quick little things. And then I'd like Mike to answer that too.
I would say traction is huge. Obviously, that's kind of that's a given. We were doing really well, and we didn't have a sales team. It was all inbound, and we had crazy traction without even trying. So that was a huge win for us. Beyond that, you got to pitch a huge vision. Do not sell yourself short. Do not think a year from now. Think 10 years from now. Shit, if you can think more than 10 years, amazing. 20, I think everyone needs to do this exercise of think of where you want to be in 10 years, and then think, and then what? And then think, and then what, until you actually can't go anymore, until your brain is exhausted. Because, those all sound like crazy ideas when you're talking about them, but, those are the ones where you can, if you can articulate a clear path to that, of how you're going to get there, and things that you know about the industry and how it's evolved and changed over time, you're not going to look so stupid. And I think that, metrics, huge. Articulating a large vision that doesn't just leave people dumbfounded because you couldn't explain it properly, and really comes down to, I think, just being a likable person and being able to take criticism, but in that room when you're talking to them, you can get a really good sense from a person if you can give this person feedback and if you can work with them. I think from both sides, if they gave me feedback and I just completely shut down, that's a no-go for them, for sure. So, and likewise too. So I think having some sort of connection was extremely helpful. So metrics, a bigger vision, and really being able to just have build a relationship in a short time. And beyond that, I think it's really just keeping them in a loop, keeping them updated, what you're doing, whether it's monthly investor updates, keeping those ties close. Because from the time I started raising that money to the time we closed it, it was like 4 months. Doesn't happen overnight. So.
And Jordan, how much to date have you raised? Is the 1.2 the total, or was that additional?
It would be 1.5 is
1.5. Good for you.
To date.
Yeah,
Yes.
good job. It's not easy.
Thanks.
So the Vendasta journey is a little different, but a lot of similar elements as well. The gentleman that started the company started in 08 and looked for funding a little bit into the journey. They had the ability, as they were building what they saw as their vision for a SaaS company, they were doing some consulting work to help pay the bills. So there wasn't an immediate funding need. But as they started to gain some traction, there became funding needs, and they used grants and everything along the way to help that process. But when it came time for that first round of funding, they did find it locally with Victoria Park Capital. Political environments changed here in the province, which really actually almost upended the investment for the company. So ended up having to go right back out to look for additional funding. And ended up finding it with 2 VCs. So the question about location, our funding comes from BDC and Van Edge Capital out of Vancouver. So there's no local funding within Vendasta currently other than the founders. And it is a continual struggle, I think, to find local funding. There's a variety of reasons. There are very few that could provide funding, and we're now at a size as a company that we're probably precluded from them being able to provide what we need. So to date, we've raised $7 million. We're in the process currently of going through the next round, and I wouldn't anticipate it will be from local funding. And it goes back to the comments that the investors made at the beginning. We tend to be very humble people here, and we kind of undersell what we're doing. And Vendasta's case in point, if you look at the SaaS metrics that we've created as an entity, our biggest pushback is people don't believe our LTV to CAC ratios, and they just think it's not possible. And that's because we're based here in Saskatchewan. We have some benefits of low-cost employment, still rising, but low-cost employment, and we bootstrap to get things done. And we have to be a little bit more vocal and proud of that as we go out to raise funds. And to Jordan's point, the vision is it can't be what you're going to do in the next couple of years. It's where is this company going to be in 5 years. We are going to be, Vendasta will be $1 billion company for sure. It's just how quickly can we get there.
Right, that's great. Thank you. So actually, Mike, while you have the mic, so with the money that Vendasta has raised to date, what is the big focus for the investment? I mean, obviously growth is one, but you and I were talking earlier about, some of the challenges that you can get when you raise that money, and how do you work that being a CFO?
It keeps me up at night.
Good. That's what the investors would say.
It is. They're always happy. So both of our investors are quite happy when I get stressed. And Brendan, who's our CEO, does have that longer term vision. And the last thing he wants to have anybody in the organization tell him is that, we're moving too quickly. That's my role, and he still laughs at me. We want to move at breakneck pace. We got the funding not to sit on it. We got the funding to use it to accelerate our growth. And that means we need to be adding people and resources to do that. So we've spent a lot of time in the last 18 months working on our sales funnel, understanding better how to generate leads and take them through the process. And there's still work to do there, but we've refined that really well. And at the same time, we don't want to slow down development. The area that we play in as a company, so we currently sell to about 1,700 partners, use our platform that was created here in Saskatchewan to sell to small businesses all over the world, from anywhere in the US, Australia, UK. And out of that 1,700 that are currently using it, we know that there's over 240,000 that could be using our platform, and we want to get to them as quickly as we can. So that means we have to use those dollars to do that. Our biggest struggle is going to be finding the people here, and we have to consider other locations for that growth just to help the expansion.
Yeah, absolutely. I think I would like to kind of go off script a little bit, because you touched on the pace in which a company needs to move. And I think one of the things that I discovered in the Valley is that there's a constant hustle and urgency. There is no like, oh, we're making, and I should say, you know, I was probably one of those companies like, oh, we're doing good, I can pay myself, life's pretty good, we're gonna get there. No, you are not. Like, go. Neil said to me, go, you should have went yesterday, you know? So maybe if the investors and the companies actually just want to talk about the hustle that a startup really needs to get off the ground. Because I think, and correct me if I'm wrong, Neil and Chris, the energy is probably a little bit different, maybe a little less. Do you think it's slower paced here, or what are you seeing?
I don't know that I have enough data points from Saskatoon to answer that properly, but most people who are crazy enough to start a business are pretty hardworking folks, and the people who are probably more crazy, who are the first to join them, tend to also be pretty hardworking. I think the challenge is in keeping up the pace appear when you start to grow a little bit. And you know, you've got a problem right now, a human capital problem. And to stay consistent as you grow is a bigger problem than going fast when you're small. I mean, I think everybody who's in a startup wants to go fast. Sometimes the CEO doesn't want to go as fast for whatever reason. But I think that most startup groups that I've ever met, regardless of the geography, are more than happy to go at a breakneck pace and work harder than other people. That's who they are. That's what they like. They're on sort of a crusade, and they're having fun. So I don't really. I think if you don't have that mentality, then you're going to fail quickly.
That's true.
Anyway,
Yeah.
so.
Yeah, Lori, go ahead.
I spent time with Jordan and earlier today.
45 minutes ago.
And you know, he's had the experience of being in the Valley for, was it a year and a half, Jordan?
No.
7 months?
Like a third of that. It was like
Six
4 months.
Yeah.
Yeah, it's like
4 months. Well, I think the 4 months gave him some. Well, one, he got financing, which is a big deal, of course. And then he came back home, and now he's working 24/7. So he's got the Valley mentality. Not that he didn't have it before, but he and his team are cranking it here 24/7, and he plans to stay here and build the business around the world, but headquartered here. So there is some in the Valley. Everybody's in the business. Whether you are or aren't, you are. By definition, you're living there. And there are some crazy entrepreneurs, like Chris said, but it's not really any different than anywhere else. They happen to have funding, and they happen to talk to their peers, and they get kind of caught up in it. But you can do the same thing anywhere if you have the funding, you have the mindset. And if people mimic Jordan and Catherine, it can get infectious. And it's not just 8 to 5, go home at 5:01, but work all night if you have to, work all week, work weekends. Sorry, you can't get outside this weekend, you gotta work. It's okay if you're really motivated and driven to succeed, and that's what it takes in small companies, for sure.
Absolutely, thank you.
Just a quick comment too, and again, I haven't been to the Valley, and I had to ask where exactly the Valley was, because I wasn't sure if it was just San Francisco or how far it went down, so it was great, thank you. But one of the things that I want to say, and again, it's from what I've seen, I see here in Saskatchewan, we are known for being hardworking. So I wouldn't say that our entrepreneurs are hustling less. What I would say is they're probably hustling the same amount, if not more, but they're doing it with probably 1/10 or 1/20 of the resources that you would have if you were down the Valley. I think, you know, they're underfunded, and we've been known for this in every single industry. We do more with less. And I just want to make that point because I think it's critical. I'm very proud of sort of Saskatchewan and being from here. But I've seen, you know, some of the companies that we invest in, I've seen their competitors, they have competitors in Silicon Valley that have, you know, like they do a $30 million raise, they do a $25 million raise. And yeah, they might be further ahead, but are they that much further ahead? So again, I think we have to keep everything in perspective.
Yeah, I'd also just say that, so Vendasta, I joined the company in 2014. We were 50. I was 55th employee of the company. We're now 220 people. So we've got some great growth. I think one of the issues that you come across as you grow is sometimes you can get complacent with people on the bus that aren't necessarily as driven as that CEO and the first folks into the door. So one of my comments to this room is, make the tough decisions along the way. We have to, on a regular basis, let folks off the bus, and we do it in as nice a way as possible. But what we have found as we do that, when we identify someone that isn't necessarily pulling as hard as our expectation is or isn't working like the rest of the team, it is a great boost to the entire company when you decide to part ways. Because as an organization, they recognize that the people there are being valued for the hard work they're doing, and also they recognize that we're making those tough decisions. So
That's excellent.
Is this on? Yeah. So correct me if I'm wrong. So you don't want people that are just coming in and eating the snacks, right? You want people to actually work.
Especially from the CFO's point of view, you can't just have the snacks.
Yeah. That one.
Exactly. Yeah,
Who has the best snacks?
We do.
Dino
for sure.
Sours. Vendasta has some good snacks.
If things don't work out for you and I, Jordan, we can.
Yeah.
Okay. So the next question is, again, for the investors. What are the top 3 things you look for in companies when you are investing? We have a lot of new companies in the crowd, and they're probably curious on how they can best position themselves when they're going to meet individuals like yourselves. Chris, do you want to start?
Sure. The first thing that I look for is, and it's because of my perspective, different investors have different perspectives and strategies. But ours is early stage investing. We're going to make a lot of mistakes. But when we hit something, we need a big piece of it, and it's got to be a huge multiple to make up for all the mistakes that we make along the way. So the first thing that I look for is a big market. If you don't have a big market, you can't make a big company. If it's not a big enough market, I won't look at it. I'll just say, look, it's just not a good fit for me. It could be a brilliant entrepreneur, great team, interesting idea, but it's not a fit. So market's number 1 for me. Number 2 is the leadership group. If it's small, it's just the CEO. It's just the CEO. But I like to know the whole team, not just the person who's leading it. It's hard to know from a pitch what kind of a team you have, what you can expect from them, and what you need to do to fill in the gaps. So the whole human resources part of it is number 2, I think. And the third thing is, am I a good fit for the deal? What am I going to do for these people? What experiences have I had that maybe will allow them to go a little bit faster, avoid a couple of mistakes that I've made? And part of that fit is also, can I really stand being in a room with the CEO for many hours on end?
Notice he's on the other side.
While I'm gently nudging folks the way I want them to go. And it's, I know it sounds a little bit simplistic, but I want to be business friends, not friends, but business friends with the people I invest in. I care about their families. I want them to have a life. I want the team to have a life. But we want to form some sort of team. And so that whole fit piece is the third component for me.
Lori?
So sort of similar. The first thing, though, is people. We look at people first, and my president and CEO, Greg Ewell, has, from day one, said that, Lori, this is about the people. Craig, I think you can agree with that, Eric, from what we've seen, too, as well. The one thing he said to me, and he taught me when I came in, was, is this the person, you have to look at this like a dating relationship. So when the excitement wears off, is this the person that you want to be hanging with for, a long period of time? Because we do know it takes time. So that's number 1 for us. Number 2 would be similar. We look at the product. Is there a market? Is there any unique aspect? Look at the competition. And then number 3 is, can we add value? And if so, how can we add value? So it either has to complement one of our majority-owned companies, or we have to have someone in there. For example, if it's sort of pharmaceutical area, you know, we lean on Craig. So we have to have someone that knows a little bit about it. That's kind of critical for us.
Thank you, Lori.
I can't add a whole lot to that. Chris and I have pretty similar philosophies, but my biggest issue with any early stage company is the people, period. In particular, the initial team. And does the CEO, do the CEO and I get along, and are we compatible? Does he or she have good listening skills? Do I think he or she'll have the ability to recruit the people that matter? Because at the end, if you have a great team, smart people that work together hard, because without a doubt, they're going to have to pivot once or twice or three times in the success of the company, and probably early on. And if this is not a good team with really smart people that each have a real skill, yet they can work together, it's not going to work. They've got to be, in my view, a team that can work together, hold together for the first few $1 million in sales, because otherwise it's going to fail. So I spend a lot of time on that part of it. And if you go back, and I always tell them to go check my references. Talk to everybody I've ever invested in. Every company, here's the list, and you want names, I'll give them to you. Because I want them to know whether that organization or people or whoever they call finds out that, yeah, Dempsey's a real asshole, or he's a really good guy, or he's something. But they'll have an opinion, and they'll find out, well, maybe this is the firm I should use. I think they really helped us get there, or they didn't. And then we can keep those discussions going and get to know each other quickly, as they'll have my background and I'll get theirs.
Great, thank you. Lori, this question is specifically for you. What would you like to see more from with the Saskatchewan companies that are approaching you?
Okay, I've had no preparation time to kind of get this around my head. The one thing, you guys
Is
might
there a
have to
long
yell,
list?
These guys might have to yell something out. You know, we struggle in that, like, it takes time. Due diligence takes time. So, you know, one of the things I think that we see that sometimes we cringe at is just the hockey stick projections too as well. Like, we like to see we like to see people that are realistic, you know, in the fact that, like, we love the enthusiasm and it's awesome to have enthusiasm, but, you know, sometimes, like, I don't think anyone has hit the projections from the companies that we've invested in. You know, it's few and far between. So it's just, you know, can they handle the fact that things may not work out as planned? So I think that's one thing that we try and talk to the entrepreneur and see whether or not they can kind of get their head around that too.
Right. Okay, that's fair. Someone get Dale a permanent mic. That's great. That's great. That's what we're here for.
This is for you, Lori. Yeah, this is for you. Would you really want to invest in a company that's only going to do 30% growth a year?
No. Well, you know, you want
Don't you
growth.
want to try and
Sorry,
find
we
one
want
that'll
growth.
double
Like, we
every
definitely
year?
want growth, and we want them to be positive, but we do want them to be realistic. And you know that too. Like,
Oh, for
we've
sure.
seen lots of, like, okay, I'm going to be $1 billion company in year 3. So, you know, you kind of go,
That's
well,
more
how,
like the
how are you going to get
growth.
there, right?
That's
like,
a
that's a big thing.
huge hockey stick.
Yeah.
Yeah. Okay.
Classic pool growth. Okay, great. Just a few more questions here, and then we're going to open it up to the floor. If anyone has a question, maybe you can raise your hand, and T-Bone can bring you the mic in advance so that we're ready. Time efficient, capital efficient, number 1. So we are fortunate that in Saskatchewan we have some great government grants and opportunities, and they've been critical in Coconut Calendar's success. Both Cliff Klein and Mike Redding are here, and I appreciate you attending. You know, these are folks in the government that have actually had me on it, and many of us at different events saying, you know, what can we do to take your company to the next level? Because it seems like you guys are going out and having to work really hard. We should be able to make this a bit easier for you. And how can we help impact your business? And I have my own thoughts, and I've shared those. But I think both Mike and Jordan, I'm assuming that you've taken advantage of some of these programs. And if you just wanted to share, because a lot of people aren't maybe familiar with them, and just maybe if some of your thoughts of where you think they could go. Go ahead, Jordan.
Okay. Yeah, so we only recently took advantage of IRAP, so it's amazingly beneficial. I know there are other grants out there, SRNED, another one. While I think grants are important, just speaking from my own experience with these types of things, I think money is a great thing, no doubt, and it'll keep you alive, especially in that early stage. But what I personally would like to see a little bit more of is, just going through the motion of what we did as a company to go learn what we needed to learn, because it's such a crucial part of it. If you just get money, you don't know what you're doing, you're going to burn it all, and it was a complete waste. But I would like to see some sort of, whether it's like a grant or incentive to, maybe if a company does get into an accelerator or somewhere else in a bigger city, maybe there's some sort of like sponsorship for them to go, and then they get the other half of money when they return to Saskatchewan, or something like that. Some way to bring them back, because you're just going to learn so much faster. It's going to accelerate what you can actually do as a company, and you're just going to move that much quicker. So to get credits, I think those are awesome things, but we're missing such a key component, which is the knowledge factor. And I think that you need to go somewhere else to get that right now. I don't think it'll be like that forever. I think where we are right now, I think it's beneficial to do that.
I'm not officially on the panel, but I'm hosting the event. So, Jordan, I 1,000% agree with you. Spending time, Neil and Chris both opened up the doors that we were meeting with CEOs that started, they raised $800,000 in seed, and now they've IPO'd and are potentially, selling. It's unreal how much you can learn from them even within an hour. Yeah. Just someone who's been there and done that, and you see folks like our companies that, we're spending our own dollars to go down there, do what we need to do to learn, and then we have to bring it back. And I think it's knowledge, but it's also talking to those folks that are experienced, and it's tied in together. So I couldn't support that any more than what you've said. Go ahead, Mike.
So we have used a variety of sources. We've used IRAP in the past, are currently using an IRAP grant. We also were successful last year, and it was announced that we've received some WIN funding. So we have a $3 million interest-free loan from the government, which is just helping us accelerate our growth. And on top of that is the SRNED program, which we utilize quite a bit. We spent over $10 million last year on R&D. So a program like that supports that is very valuable to us as an entity. I would love to see Saskatchewan be more supportive of that. It was disappointing to see when the government changed the SRNED component for Saskatchewan. And I think it's as important that we make sure that whatever programs we have are really available to everybody in the space. I think one of the things that was said in the past was the government shouldn't be picking winners and losers. Let the companies do that. So make programs available to everybody, and I think that's a very important component we should try to strive for. All of those are incredibly helpful to companies. Part of it, sometimes when you see those types of programs in place, they're really for companies that have already gotten through the struggle of kind of making it, which is, I don't know how you overcome that. We've got to the point that we can tap into some things that we weren't able to before, so it'd be nice if there's a better way to do that as well, but I don't have a solution necessarily.
Well, I think that's definitely why we're here, right? To kind of figure out what are some of the struggles that we have and how can we overcome those. So thank you. Let's get going to some questions. Did anyone raise their hand? Thank you. Go ahead. Oh, you might just have to repeat that.
Hey, just a question for Catherine and Jordan. Just so in the early stages of your company, when you were you had your idea and you were getting out there and trying to see if it was worth something or if there was value there, how did you sort of balance protecting your idea and not telling everyone that you've got a great idea and they might steal it versus promoting yourself so that you can get some traction?
Okay, so.
I'm sorry.
Come on. So if I said to you, and it's funny because I'm like, I do appointment scheduling, and they're like, oh, really? I could build that at night. No, you cannot. No, you cannot. So unless you have this like amazing genius idea, and like we look at some of the most profound companies in tech, took them 10 years to be the overnight success. And I've met with entrepreneurs who are like, can you sign this paper because it's such a great idea? Give me a break. You can have the idea, but it's gonna take you, and I hope you guys agree with me, but it's gonna take you the execution is so critical, and it is not easy. And if it was that easy, all of us our Excel sheets would be right, and we'd all be billionaires by now. With that being said, I don't know what industry you're in, so maybe there is something
in software, I mean, in particular in software, when you're talking to people who have bigger companies than you who could probably rip you off, like recreate what you've done, what kind of advice would you give there?
I would honestly spend your time and energy in just doing your idea,
Yeah, I agree.
and sharing it with people and get the right people on board with you. And just don't waste any time mulling over what if, because trust me, there are way more what ifs when you actually get the ball rolling. But yeah, I would say like I'm fundamentally opposed to withholding these ideas and just keeping them bottled up. Some of the best things that we built in terms of product were shared ideas and just bouncing ideas off of people that were, could have taken it, but that, it did two things. It either opened up a conversation where they were adding meaningful input to add value to your own product, or if you weren't there yet, it inspired them to join your team because you were selling them the vision. So they just wanted to come on board. So I think that the more time you can focus on energy on just kind of like figuring out how you want to go about it, I think that's just probably a better route. And in terms of like secrecy, I mean, as investors, like I'm not gonna, I don't want to speak for you, but but I think if someone comes to you and they're like, here's an NDA to sign, I think that's the biggest get out of my office you can probably do to someone like that as well. So
Yeah.
The only thing that's going to help you is distance.
Go ahead. Listen, it's idiotic to think that a venture capitalist can take your idea and make a business out of it. This isn't going to happen. We never sign NDAs, ever. We get hundreds and hundreds and hundreds of plans, and once we see the situation or meet you and decide not to do it, it gets destroyed. We wouldn't know what to do with it anyway. So your fear is unfounded, totally unfounded. Don't worry about that. Just go off and do your deal or do your company and start it and make things happen, and all good things will happen to you.
It is a good question though, because it does happen. Yeah, absolutely.
It's also sharing your idea with other folks. As you do that, you're going to get more, as Jordan says, you're going to get more input. Everybody has stuff to do in their own day, and they're not focused on your idea the way you are. So if you keep driving that agenda, where I say the only savior you have is distance. I mean, that's how we've worked as a company. We can't protect all of the software that we've built, and we know that we just have to be building a little bit faster than, there's lots of people out there that offer a platform for companies to sell products. There's lots of people that sell reputation and social. We just have to keep moving as fast as we can to keep our products ahead of everybody else's.
I also think Jordan. I think the best way to protect your idea is to acquire the most amount of customers as you can, as quickly as you can.
Also, it's extremely hard to steal passion.
Yeah.
That's true. So if you're really, really passionate about what you're doing in your product, having someone listen to it and go off and be excited about it as you have been, because it's been dwelling in your head for the past 4 to 5 months, is really, really hard and probably not likely.
Yeah, that's fair. Thank you. Next.
Yes. Hi.
Oh.
In the back.
Oh, hi, Jordan.
Thank you.
Yeah.
So I'm just curious to know, from both of the perspectives of the investor as well as the three of you as entrepreneurs, how did you as an entrepreneur identify what you valued your company at before your seed or whatever level, the early rounds? And then as an investor, do you guys ever see valuations and just wonder where the hell did you get that?
All the time. Do you want to start, Chris? Go ahead.
When you've done a lot of deals, there's sort of guidelines for different rounds based on how big the company is, revenue and all that. So it's a little bit of a cartel everybody kind of knows what the other guy's bidding within a certain tolerance. And so there isn't a lot of variance there. I just don't think that ever really entered into a lot of our good deals, that we had a big bidding war. We were either the right group to do the deal or not, and the valuation was reasonable. It was this, generally the same as everybody else was offering. When we see wacky valuations, it's one of two things. It's either, one of these peaks in the market, which we had, I'd say probably about 2 years ago, at least for early stage stuff. Or the entrepreneur has chosen to get funding from, let's say, an unconventional source. So that would be either some foreign money, or an investor who isn't experienced in tech investing. I see a lot of situations where entrepreneurs who just need fuel to keep going give up too much of what they have for too little money. And typically when we come across a company like that that we're really interested in, we'll go to that previous or existing investor and say, this isn't going to fly, and we'll just tear it up. So I think once you get to the professional round, it's going to get modified. At least it should, if you have a good investor.
Okay.
Yeah, I think Chris is right. There's lots of metrics and documents that give you kind of what Series A is worth, what Series B is worth, what percentage ownership the investor should have, and what the management should have, or the employees. So it's not, you can iterate on that and get pretty close to what's a reasonable evaluation. There's always outliers, and there's tiers of VCs. I mean, I hate to say it, but there's the A list, the B list, the C list, and sometimes the C lists are so hungry to get an opportunity to get a deal, they'll pay more for it than they should. But that does happen. So you just got to know who you're dealing with. But in essence, if you talk to enough people and talk to enough firms or talk to enough of your colleagues, you'll find that whether your valuation is within tolerance or not. It's pretty self ruling at the end of the day.
Banter, like internally within PIC all the time, and it's a struggle, and it's different depending on the industry, depending on the entrepreneur. But anyway, if you guys have anything you can share, please share.
We
In
have
Saskatchewan,
no magic
not
formula. Look, we've had a modicum of success over the years. We've had some huge losers, and we're only as good as our last deal.
Yeah. So maybe
We're still working on our last deal.
I don't know. I'm curious to. I mean, maybe I'm not supposed to be asking questions, but I think it's also easy to kind of get caught up on just valuation. But the terms of the deal are also equally, if not more important. So I mean, just your guys' thoughts really on like those types of things and what your opinion would be.
So, go ahead. The term sheet is the most overblown thing on the planet Earth because it's all downside protection, and downside protection doesn't do squat for you. You may get a little bit back, but at that point it doesn't matter. So I don't argue over all this downside protection because it's nonsense. All this stuff that's in those term sheets, you shouldn't worry about it because you're doing this investment to make it go upward, not downward. So we as early stage investors really try to avoid that stuff. We get to see it in Series B, Series C when we're the A player and have a big percentage, and they're trying to grind some of that percentage away from us and not paying up what they should pay for the value. And we've had that happen a million times. For the most part, we don't ever let that happen, but it does on occasion. I can think of Exodus, for example. No defensible technology. Why is this going to be successful? And we did Series A, and it was a struggle. Series B was a struggle. But in Series C, it was the company was starting to get successful. Still with no defensible technology, just growing like crazy. So all the venture capitalists that wanted to do Series A and a big price wanted all these terms and all these caveats to carve back return if something went wrong. So we just said, no, we'll do it ourselves.
Fair enough. Okay. Chris, do you mind he's like, oh no, what do you get me into? We were talking about good deals and bad deals, and I think you have a fantastic story about your flea market. Are you okay sharing that story?
Well, I don't know that it, well.
I think the point of sharing that story is that, you know what, not everyone gets it right every time, and that's okay, and there's always other opportunities.
Oh, yeah. Let's see. I'll make the moral of the story something that's a little bit, because there's lots of lessons from this mistake. But I think the takeaway for this group is you can make a lot of mistakes and still be successful. Mm-hmm. You don't have to be right all the time. That's not possible. And so, but if you're not trying, you're not going to win. Not even a little. So my big stupid mistake was when I was still an operating executive, I went back to the offices of Benchmark Capital, top tier investor who had been in previous deal that I was in. They made some money, so they let me in the door. And I said, hey, I need a new job. And the venture capitalist there told me about this company and how great it was. There were 50 people, but they were really going to grow. And they hadn't even spent the Series A money, blah, blah, blah. I said, what do they do? And he explained it to me, and I said, that sounds like an online, like electronic flea market to me. And he said, this learned, incredibly successful venture capitalist who had never given me bad advice, he said, never underestimate America's fascination with junk. And I didn't get it. I honestly didn't get it. And I just said, you got anything else? And it was just a huge mistake. I could have had 1.5% to 2% of eBay. So I had to work a lot harder and a lot longer than I would have if I had just said yes to the smart guy. But it was a big mistake. But I've made plenty of them, and I think that really for this group the lesson really has to be you're going to make mistakes. Don't worry about it. You can still get to success.
Yeah, absolutely. Okay, I think we have time for maybe one or two more questions, and then we have to wrap it up.
Yeah, so I have a question for Jordan, actually, in regards to...
So for Jordan?
Yeah, Jordan and Catherine, both.
And me,
yeah.
okay.
So we're a startup. We just started last year, and we've done fairly well. We've done about $130,000 in revenue. But we're kind of trying to toy with the idea. We're trying to see, what's the benefits of raising capital or not. So I'm curious from like a founder's perspective, what made you guys decide to want to raise capital and the logic behind that?
Well, it's interesting. Jordan and I worked together for a year, and I can tell you that, and I could be wrong, but Jordan and I probably had different mindsets. For me, I was a small thinker, like Neil had said. I wanted to bootstrap. I wanted to do it myself. I wanted to prove how far I could take the company on my own. And like Neil said, when I went there for a month, I still wasn't even sold I wanted to do it. Because I I thought at that time, I was naive, and I thought at that time it was just about the money, and that I missed the part about how much someone can help turn the lights on for you. So looking back, I think our timing is right now. Like, I think everything for how my business was, if I maybe, being in the enterprise space, it's super hot now in online appointment scheduling. Companies are getting it and they're phoning us. So I think it's all worked out. But I think if you have a great idea and you can accelerate it, I would suggest, finding the right people. And one of the things actually that Brendan King had told me when I was talking about it, because he was kind of the guru of fundraising in Saskatchewan, and he said it to me straight. He's like, what kind of life do you want to live? Like, where do you want to be? There's nothing wrong with bootstrapping your company if you're fine being at whatever that level is, and that's okay. That's a personal choice. But what I was finding is for myself is that, like, okay, we kind of got there, and then you kind of get, not bored, but you're kind of like, hey, what's the next thing? What's the next thing? And so fortunately enough, I had my eyes opened, and I think it's the best thing that I've ever done. I think I have the best opportunity. Our whole team has the best opportunity to scale completely, not even just in the business, but as ourselves as professionals, and actually really learn. And it's an awesome ride. Like, well, it could get scary. I don't know. Like, we're starting. So I think you have to decide for yourself what kind of life that you want to live. And no one can answer that for you. And I think I was looking for someone to answer that for me. And I struggled. And so I think the best way for clarity for myself was to make a decision. And this one day I just said, okay, that's it. I'm done thinking about it. I'm going to do it. And it could fail epically. But like Chris said, you're going to have failures and it's not going to work. But that's okay. We hear this all the time. And if entrepreneurs just keep getting up, it's not how many times you fall down, how many times you get up. Wow, that was cliche. Okay. Go.
I can guarantee it's going to get scary for you.
Oh, okay. Can someone bring me a vodka, please? They don't quite know me yet. No. Go ahead, Jordan.
Totally. Was the question like, what are the pros and cons of taking on venture?
Well, I was just curious to know what was your decision to do it? Because I've heard things of like raising capital is like a full-time job, and from an operating perspective, that doesn't sound very appealing to me. So, just curious.
Okay, yeah. The reason I decided to raise capital was because I bootstrapped the company where it could pay for just myself, and I was working out of a 10 by 10 office, and I was like, this is boring.
You had an office when you were by yourself?
Yeah. It was like $100.
We had like 3 people on a couch, Jordan.
Yeah. Well, that was me at home until I decided to split an office with someone so I could feel like I got to that next level. It was like this internal. I'm going somewhere, right? I'm going to literally this corner 10 by 10 of leaky ceilings.
That's fair.
But so for me it was more so I wanted to. It was boring and I wanted to build something way bigger because I like working with a team and I love working with people, and I wanted the best shot at doing that, and doing it in a place that it's kind of foreign. So that was my reason as to why we went that route. And in terms of it being a full-time job, for a set period of time, yeah, depends how much you're raising and where you are, how what your access to capital is like. Yes, it's a lot of work, but and you want to get it done as quickly as you can so you can get back to running your company. But yeah, that's just a sacrifice you make to keep the lights on if that's the scenario, or even better if you're in a great position where you guys are a couple people and you're profitable. You're in a way better position to raise money, and you're not going to pull your hair out as hard. But yes, it is time consuming.
Just to expand on that, I'll tell you what, you're going to learn a lot fast when you go in to pitch a company and they're hammering you. It's a wake-up call. It's a ninja kick. throat punch. But you know what? It was awesome. Like, those are the meetings when you go into and they're like, you need to have this. You go back and you really think about it. So when you come next time, you're better prepared. It is no joke. And if you really want to learn business fast, go do a few pitches.
Just like for the type of company you're starting, I would just seek out people that are doing, either have invested in that space, or people that, you know, are experts in, say, marketplaces or whatever it may be. And just go grab them on LinkedIn, send them an email message or something, and just find a way to get in touch with them and just ask them for feedback. Just start the conversation. By this point, you're not asking for venture capital.
Do not do that.
So the old saying, it's cliche, but like, ask for advice, get money, ask for money, get advice. So, but seriously, just like open the door, start conversations with people, because it might lead to you to have the option to raise venture, and then you're at a good place because you built a relationship before you did it.
Yeah, I would it's not about walking in and saying, giving me money. That will not work, I don't think. Didn't work with me.
Thanks, appreciate it.
Are you? Okay, you're taking over.
If I could give you one word of advice, or quickly advice, just very quickly, but
Sure.
sometimes you don't want to raise money. Sometimes it's easier to make sales and raise money through sales. You don't have to give up any equity when you get a bunch of customers. So depending on your market, on your margin, your everything, you know, you might want to just, like one of my companies, I bumped my head for 4 or 5 years trying to raise money, and somebody came and I said, why don't you just go find more customers? and within 2 years I had doubled sales, and I didn't need to raise money. So it all depends, right?
Thanks.
Sorry.
Goes back to what Neil said. There's no magic formula. You have to do what's right for you. Yeah. Okay, one more question, and then we're going to wrap things up. Yes. Do you just want to? Okay, great.
Yeah.
Thank you.
Yeah,
we got one.
I got that foghorn voice.
Thanks.
Okay, I won't yell into here. Just mostly for the two of you, are you able to find, or have you, over the course of your experiences, been able to find local mentors? Did you find it easy? Did you find it hard, to find local people?
We talked about, I'm a huge advocate of mentorship. I don't know why you would just limit yourself locally, and I'm not sure that was really your question. I definitely have local mentors that I go to for certain problems. I think I would go back to say that I do reach out to a lot of the companies that Neil and Chris have introduced me to, and these are companies that are now, 100 million in revenue. We just don't have that here. But with that being said, there's some great people that I would go to. I would definitely go to Mike and say, as a CFO, what are your thoughts? But there's certain things that I don't know if we have that experience here yet, but we have the technology to not just keep it local. So I think that goes back to why it's so important to get that mentorship and get that knowledge and experience, because we do want to have those companies here, so that we can offer that, right?
Yeah, I did seek out mentorship here before we went to the accelerator. We had, to date, I don't think that we really go to anyone locally personally. That's not out of spite. I love Saskatchewan. It's more so along the lines of what Catherine was saying. It more has to do with the fact that the people you want to talk to are the people that have been there and done that for certain types of technologies or businesses. And I'll go as far to say as accountants and lawyers too. Like, your Uncle Bob is probably not going to be the best tech lawyer. He can do, like, I don't know, probably small stuff. But when it comes to finding those types of people that have been there before, our lawyer is a firm. It's a firm in Vancouver, and all they deal with are tech companies. So to us, that was kind of a no-brainer to look for a company like that for mentorship on, like, when we're discussing terms, who am I going to talk to? Am I going to talk to Uncle Bob in the basement? Or I'm going to talk to the firm that deals with Shopify. Well, those guys will probably know and understand the logistics way better than Uncle Bob will.
But this is a good example, because I actually got introduced to our lawyer through Jordan, because I'm like, we need this knowledge, and it wasn't good for me to explain to the lawyer, what SaaS meant. So, It's no joke, and it's okay. Like, there's just strengths in different people for different things. So, that was a good example of companies helping each other. Okay, people are probably tired of standing on their feet and are very thirsty. Marie's like, yes, no. Okay, so why don't we just do a quick closing comment from each guest on the panel of, let's remember that we can go to melodies after that. I kind of feel like I don't want to end it, but I know we do. So the last question I had is for each of you, and we'll keep it quick, is what do you think is the best way to keep the momentum going, to keep things going here, and so that it doesn't fizzle out?
I think even just more stuff like this, like where we're kind of getting people in the same room that are like-minded. I think that just bringing more of in our specific case, like the tech community out and, talking about issues and problems and how we can go about them, because, that is why the Valley works so well, is because they have such a vast network and people are just like introducing you to people, they're chatting with you, they're like, oh yeah, you have this problem in this, I know this guy, I'm gonna go and talk, I'll introduce you, and they think nothing of it. I think here we have a little bit of if I introduce him to this person, maybe he'll make a bad impression, like just screw it, like you need to, and we all collectively just need to build that network a little bit better and reach out a lot more.
Totally agree. Neil?
Jordan, I agree with that. Well, first of all, Chris and I have been here since Wednesday night, and we attended PIC's Minority Investment Conference yesterday, and we've been busy from daylight to dusk, and then
I only
some.
get them for so
and
long.
It's been a wonderful experience. I've really enjoyed it, and today's really the climax of a great 2.5 days, and we've learned a lot. We think I've benefited by it. Chris has benefited by it, and hope you all have. But I think this group alone, if you all network together and got to know each other, you'd benefit dramatically. I think this is in the infancy of getting better and better and better here in Saskatoon, and I encourage you to invite others to come to do the same thing that we did, because every time that'll happen, you'll get this group together and you get even more people to attend. So it's been great, and look forward to coming back.
I just want to say same thing. I think part of it is we need to create that culture, and I think thank you, Catherine, for doing this. I think this is amazing. I think we've got little pockets that are starting. It's kind of cool to see. We've got, the Communitech model. They do this stuff all the time. I know our provincial government's working on some cool initiatives. The more we can do, the better off we all are. And I think we also have to be better at celebrating our successes. I think, we just kind of seem to hide instead of saying, hey, great job. So, I want to see, we've got some great companies here. We've got Western Business Machines. We've got Vendasta, that are, big companies really in this tech space. So I think we have to start getting them involved. I think that's critical.
Thank you, Laurie.
We I think learn a lot from each other. My previous industry, I was in spirits, so I like being home in a distillery. But one of the things I had the opportunity was to sit on a group of finance professionals from large companies around the world that wouldn't normally share information, Coca-Colas and Caterpillars and large companies. But when we got into a room and had a time to spend together, like this community could, sharing information, you realize you have very similar problems, and we are better together trying to figure them out. We're sitting on a gold mine, I think, here in Saskatchewan, because we have some great benefits, both from the quality of kind of folks that we can have working here, plus also keeping our costs lower than places like the Valley, because there is somewhat less competition. So we do well to help each other, and I think we should do that as much as we can, and I would encourage events like this. We'd love to be part of them. And also, to Laurie's point, we need to be a little bit more proud and a little bit more boastful about what we've accomplished and what we are accomplishing here, because we can do things better than anyone else if we put our mind to it, and we need to make sure that we are communicating that to anybody we get a chance to do that to.
This is just for tech companies. Resources are on demand now and pretty cheap. Whether it's storage, processing power, whatever, networking, whatever you need. Starting companies is much cheaper than it used to be. An order of magnitude cheaper than it was a decade ago. You don't need that much capital, and you don't need that many people to get started. And what's happening is that our business is starting to spread out. I'm a limited partner in a fund in Bend, Oregon, of all places, hotbed of technology investing, right? That first fund is going to do 3 to 8x, okay? That return to the limited partners is something that's going to catch people's eyes. And who are the limited partners? Dentists, doctors, old fart, retired guys like me, you know. That is going to keep happening. Here, there's a lot more money, a lot more people, a lot more talent than Bend, Oregon. And so I think that whether you believe it or not, it's going to happen. And it will happen for very logical reasons, right? Not everybody wants to be in Silicon Valley and battle traffic and pay $5,000 a month for a 2-bedroom apartment. And not every company needs to be there. You can't find engineers anymore in Silicon Valley. It's hard. You have to pay them. My son, out of school, was offered $120 to start.
That's
U.S. dollars.
In U.S., yeah.
Right out of college. Turned it down, and I almost killed myself. But, oh, I got an idea. Great. That's terrific. Yeah. How much longer are you going to be on the payroll? No, but it will happen here. I can't predict the timing, but all of the forces, or all of the things that you need are here, including the university, of course. And the kicker here that we've learned is the government, who are very, very good, especially good to my investment here in Coconut. I mean, been tremendous. And now it's pretty fertile ground there, and it will happen. I just can't predict when. It's actually starting to happen. You're seeing some big exits. You're going to have a monster exit at some point. Lots of people are going to come out of that saying, I got an idea, and it will just keep going from there. But yeah, I would like to just emphasize that communication really matters, and that the communication between you guys is really crucial to accelerating the whole region. So, yeah, thanks.
Thank you.
Good job. One last comment. Big shout out to Catherine for putting this together and inviting Chris and I to come here. We've enjoyed it.
Thank you. That's very nice. As a CEO, usually not told like, good job. It's like, yeah, you're always like, yeah, I did okay today. I did okay today. Okay, well, thank you, everyone. What time are we at? Oh, everybody out. Sorry about that. No, we'll wrap up and we can continue on at Melodies. Can we have like 5 minutes, or you'll tell us now and we'll go in a half an hour? Okay. All right. Thank you, everyone. I appreciate it. Have a good night.